What's up, everybody? Chris Dover here, founder of Pollinate Trading. And we're going to talk about the Pollinate Trading Lab, what we're doing in the lab. And actually, before we get going on that, we're going to take a look at the markets where we're at right now. We're in a bear market, but if you follow me at all, you know that I like to focus on market regimes as opposed to random names like the bear market. Well, you're down 20%, so now you're in a bear market. Big whoop. What if you're down 38%? Is that different than being down 20? Well, you're down 19%. Is that different than being down 20? So when we have market regimes, we actually use it to be more of a filter to say, okay, in this environment, this is what we do. In the summertime in North America, it's probably going to be warm. You're not going to see a lot of snow unless you're in Montana last week, like I was, and I got 6 inches of snow. You're gonna have a lot of characteristics that are very common. So in a bull quiet market regime, we basically have 5. We have bullish and bearish and neutral, and we have high volatility and low volatility. So bull volatile would be the high volatility bull market. Bull quiet would be a nice quiet drifting higher bull market. A neutral market would be banging around sideways. Bear quiet down. Bear volatile is typically where you get major market crashes that reverse themselves right away. So since about April of 2022, the latter part of April, we have been in a bear quiet market. Now, that was a little early because we hadn't actually hit negative 20% on the S&P 500 until then. So it wasn't exactly considered a bear market using traditional methods, but pretty much since, January of 2022, the market has been going pretty much down. Every time it tries to get a bounce, it goes down. It's just the way it is. Okay. So what we've been doing in the lab, when we get into the bear quiet market, we have to shift things. Okay. What was working for the last couple of years in the bull market, in the bull quiet markets, doesn't work in a bear market. So what we were doing for the last couple of years since the COVID crash was buying NASDAQ, just buying NASDAQ futures over and over and over and over and over. And, as we got dips, we would wait for it to return back and start to move in our favor. That my hand got huge right in front of the camera. You start to get dips, and as it recovers, you add and you add and you add. In 2021, we had a number of attempts there. In 2020, we had a massive run on NASDAQ. We had a couple of, we got out right perfectly right before the little pullback, and then right back in. So that's what works in a bull quiet market. We're in bull quiet, man. I'm going to be long NASDAQ. You're going to find me just hanging out, going on hikes, playing in the mountains, out and about. I'm barely going to be paying attention to the markets, and we'll be making just piles and piles and piles of money in those sort of markets. But that's the swing trading market. That's gone. We're not there. We can't hope and pray and dream that we're going to get back to there. We will be eventually, 3 months from now, 3 years from now, 30 years from now, who knows? Who knows when it's going to happen? All we know is that we're in the bear quiet type of market right now. And that buy and hold swing trading, even to the short side, doesn't work like it does in the bull quiet. It's not an opposite move. What works in the bear quiet is day trading. Freaking day trading, man. Like long and short. It's not even like, oh, we're only shorting here. Nope, you're day trading long and short. Some days you're catching major rips to the upside and it's just boom, 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 boom. Other days you're buying it, selling up here, shorting here, up and down, up and down, up and down, mean reversion style. It's just, it's probably the easiest day trading environment that exists. It's just fantastic. It's a lot of fun. It's just different. It just hits different. So we're going to break it down a little bit. I'm going to show you how we do it in the trading lab, how we're day trading this market right now, some of the different markets that we're looking at, and then, how we're getting signals out to our traders and, how we're doing. Just this week alone, we're up almost 10R, up nearly 100 S&P futures points in 2 trading days. So I wanted to get this video out as it's hot. Like we're cooking right now. We're in the middle of the fun. Also, we're up over something like 50 are, you know, some big number. It's probably like about S&P points, somewhere around 500 S&P points since we started in April. I go off of R multiples, not points, but I know a lot of people don't exactly understand the point or the R multiple system, so I try to relate it into points. Just day after day, 3, 4 R every day, and some very easy trading. It hasn't been challenging. It's been very simple, just waiting for our setups, just taking our setups, being disciplined, knowing where our edge is, and just leveraging that edge. We have traders who are prop traders with Apex futures and Top Step and Lilo. We have traders who are with City Traders Imperium and Lux and FTMO, and prop traders there. We've got personal traders, people just trading their own accounts. We've got traders from hedge funds and family offices in the group. It's an awesome group of traders, awesome group of people. And you should really check it out at the pollinatretrading.com/lab. Check that out and come join us, man. It's been it's a lot of fun. A lot of people are having problems in this market, and geez, in either yesterday or today, you could have paid for the whole year of the lab just trading these 2 days. So I want to help get that out to you guys. And even if you don't join us, I'm going to show you what we're doing here. So maybe you can do something with that on your own. And let me just share my screen so you can see, make sure I'm here. Okay. We're looking at the S&P 500 on a 5-minute chart. Let me go to a daily chart, and let's do electronic trading hours. Okay. So first of all, we want to take a look at what our market regime is and how I say, this is how we identify the market regimes. Let me show you the tools we use for that. So in TradingView, go to SQN, and you should be able to find you should see SQN Christie Fallible V2 here. Just go ahead and click on that. And that will be, that'll give you the SQN settings, which is a system quality number. And if you really are interested in how that works, there's the math. You can look at the math. It's standard deviation of basically a simple moving average times the square root of whatever period, 100 period, divided by standard deviation. Okay, great. In essence, it takes the price change, percentage change yesterday and today, and then adds those together or subtracts those. And that's why you get like a number line. You see it peaks up here, and then you're noticing the market's going down. This is also going down. That's not how you use this, though. It isn't an indicator like that. It isn't an indicator that's going to give you a whole lot of opportunity. Something's weird on this one. Let me see if this is right. SQN. Oh, there we go. I'm sorry. The one I don't know which one is visible to everybody. It looks like the one that says Christie Macro. My apologies. But you can see it's going down and price is going down, but that's not how it's used. It has ranges. So the price percent change yesterday and today, and then averaged over the last 100 trading days, gives you if it's changing 1.5%, 2%, 2.5%, 3% often, then you're going to be in it's going to be going higher, or it's going to be going a lot lower. If it's just trading, changing like 0.25%, 1/3%, 0.5% every day, you're going to be in the more neutrals. And it's a very lagging indicator too. It's not going to tell you right away which one you need to be into or out of. That's not the purpose of it. The purpose of this tool is to give you the market regime. Okay. And the market regime that sets the thing. Again, it's like a calendar. I live in Arizona here, and I'm sure most people know Arizona is a hot desert during the summer. So it's like knowing that July in Arizona is going to have a pretty average, very hot day, a long and hot day. There may be some wind, there may be some rain, but for the most part, it's just going to be a hot. Okay. So it's very easy to understand. Oh, I don't need a jacket. I don't need a coat. I don't need gloves. I don't need a hat. I'm probably going to need a tank top and shorts, right? You don't really have to think too much about it. And that's what this is all about. You don't have to think about every single thing that's going on in the market when you're able to organize things by the market regimes, right? So here in red, this indicates bear quiet market regime. Now, characteristics of bear quiet is not the same as the characteristics, or opposite, I should say. It's not the opposite of the characteristics of a bull quiet market. It's not like, oh, bull quiet goes up, bear quiet goes down. Nope. Especially with equity indices. These indices are built with the best companies in the world as their components. If a company is not the 500 best company in the US equity market, well, it's getting off the S&P 500 and the 500th best is going on. And then they shift up and down according to, these different things. So S&P organizes that way. Now, of course, you could look at this and think to yourself, well, of course, I would just short here because I'm amazing. I would have shorted this one and then just sat through all of this, right? This 3% rally back up after going down, and this 10% rally you would have sat through. Easy to say, maybe you did it, I don't know, but it's not that good of a strategy to be shorting in a bear market. It's kind of fun to be smart and thinking about, I shorted it and I'm brilliant, but really what's easier is just get in there in the day trade, because overnight we don't know what's going to happen. Another characteristic of the bear quiet market regime is, well, bear quiet and bear volatile, is that news that everybody is doing everything they can to try to fix the market when markets are going down. When markets are going up, people don't really do much. People are kind of like, yeah, it might be a little hot. You could be a little hot. We may need to slow things down. Nobody's racing to slow things down when markets are going up. When markets are going down, governments and everybody is out talking about, oh, we got to do this and we got to do that, and we got to launch this new program. We're gonna put a holiday on gas taxes. We're gonna limit profits to oil. All these things that the government is going to do. They're not like quick to do when the markets are going up and it's easy. Like, this is easy trading right here, and you see just it's small, tiny, just rising. Right? It's very easy. This is just big. Ups and downs, ups and down, ups and down. So what is easier to do is day trade. And day trading futures is, you can day trade stocks, you can day trade options, you can day trade currencies and commodities and cryptos if you want. I'd usually trade the indices. It's what I'm really good at. I've been doing it a really long time. I have a lot of systems built around doing it. And so I do it. So it's just easier for me. So I'm going to talk. So pretty much for the last, well, right in here, it was about April 22nd when the S&P 500 moved into a bear market, a bear quiet market regime. It had still been teetering, a little bit here, but it wasn't until right around this area here that it happened. And there you go. You can see we dropped from around 4,300 to about 3,650. It looks like, so 700, 43, 47, 46, about 700 points. A pretty good chunk where it was still questionable all the way here. And especially with price action, it wasn't easy to be just kind of like, oh, I'm going to short this and sit it, because the rallies were so intense. And then, this previous rally we had, and then this current rally that we're having, they're big intraday moves, and they move fast. And it's, if you're sitting on a holding position, it's kind of hard to do those. So, not impossible, but for us in the trading lab, it's very easy. So every time we get a trade in the Slack channel, I post it. We have a dedicated channel for day trading and swing trading, so that anytime you get your you know, you get that little ding when you're sitting there. You can set an alert on it. So you're like, okay, Chris called out a short on S&P futures at 37.75. Okay, here's the stop. Here's the setup. People just jump right in. So it's super easy. I'm posting all the trades that I'm doing right along with it. So, so right now we identify we're in the bear quiet market regime. Now we only use this on a daily time frame. I don't use it to drop down on a 5-minute chart or any other time frame. It just says, okay, this is what we need to do. I know that. Okay, just go. Now I know the tools that I need to go to grab. The tools I need to grab in a bear quiet market regime are day trading, just day trading tools that I have, day trading setups. Over here, neutral, it works quite well. Over here in the bull quiet, it's okay, but it doesn't work nearly as good as it does over here. Because the moves are, you know, like that's a 0.25% move in August, right? It was just kind of barely going up. These are just really small moves, and these are much bigger moves. So this tells me I got it. Okay, 5-minute. Now we're going to hide that. Now, when it gets to when I'm day trading on these, I like to have the overnight session off on the opening gap trade. So you see we had 2 gaps here, a gap yesterday and a gap today. So this was the first 5-minute candle of the day. And today, this was the first 5-minute candle of the day. Want to look at the characteristics of that too, right? What's interesting about this? First 5-minute candle of the day was a small day. You had a small run up, right? The big peak was kind of small. This was a like 3 times larger candle for that first opening thing. And what happened? It ran like far, like that's a much bigger distance than this one. But so those are 2 characteristics. So what we've done the last 2 days, it's a very simple strategy, is we just wait for the opening 5-minute and then we put a buy above it or a sell below it if there's a gap. It doesn't work on, you don't do it on every trading day. Now this would have been Monday and there was no trade to be done. This one would have stopped out. So there's a bunch of qualifying things that need to be done as well. I'm just doing it, you know, for speed to show you how quick it can, you know, how simple the trade idea really is. And, you know, it really doesn't take a lot to have a really good strategy in a bear quiet market regime. Notice these are both bullish trades too. Both of them went up. You know, if we're to go back over the last few weeks, you know, we've had, this was a, you know, down drift day, you know, a down drift day. We have an up drift day, a down drift day. So there's a lot of back and forth type trading, you know, really strong up day. You know, it's everything. You can't get stuck in one direction in a bear quiet, even though it sounds like it's a bearish down, you know, sell everything type environment. It doesn't, you don't need to, in your mind, you don't have to think to yourself, okay, well, we're in a bear quiet market regime, so I'm just going to short everything. Both directions work. It's awesome. It's a lot of fun. So after that first trade's done, then the next thing we do is we run a pivot strategy. And let me make sure that I have it on the, okay. And I have the overnight session on there. So what this is I have the opening, or this is yesterday, the midpoint between, so this line right here, today's trading, starting on last night's close when it opened in the, so it closed that session, the future session, and opened here. So this first line of resistance is yesterday's high. And then let me get this out of the way. And then the midpoint between yesterday's low. So yesterday's entire low, including overnight trading yesterday, was here. So that's my entire range for the day. And so what happened? We had the opening trade, right? Remember, I had the this would have been it, because I have the full 24-hour session, a 22-hour session on this chart now, if that makes sense. So I got long this trade. Now, the first thing that happens is, let me put my labels here. Okay, this is called market resistance 1, market support 1. This is where we're going to find resistance because it's above yesterday's high. Okay, well, we broke above it and we came back, and we broke above it again and we came back in. And so that's information that when you close above yesterday's high, the previous day's high, when you close above it, that's considered, that's bulls taking control. That's the terminology that we use. Bulls have control, and we are now in a bullish situation. And so we should be looking for an opportunity to buy, get long somewhere. And then so it closed above there, it closed above there again. When it failed to do it that second time, that would have signaled a failed attempt to make a breakout. So markets fail to break out 80% of the time. And even though it did break out, it broke above yesterday's high, what happened? It came right back in. And then it tried the third time. So after this, we got trail stopped out on this opening trade. And then we got in another one over here, 70.82, somewhere right in here. Okay, so we closed above MR1 again the third time. And so we got long, and it actually made a higher high on the day. So we were doing, this was our second trade. We made something like 5R on this one because there was multiple entries on this. Over here, we're getting long over here, and we had this nice break. Actually, we got long over here. We had this nice break up, so things were looking great. Move our stop up to break even, so we don't lose anything. Because we've already locked in a big runner today. A couple of big days already, and it took off. We were like, okay, well, all stops have been ran. The reason this one spiked like that is because it broke above the high here, right? Because now you have every short in the world, because it failed to do it, they shorted this and they put their stop right there. Every bear or every short basically had their stop right there. So that'll run this, the extra volume will run that. And so when that happened, I'm like, okay, good. We've got a new high. We've got a new high, and it's on volume. It just so happened to be, that was it. That was all that was left. There was no more juice with it. So rather than letting it go against me, I raised my stop to break even, and I just sat there and let it do its thing. And it came back and, tried to do it, and then just stopped us out at break even. So we had a great win, right? We had a beautiful winning trade on our first trade of the day. That was a beast of a day. I think it was something like $2,200 per contract on this one. And we traded multiple contracts. If you traded multiple contracts, you would have had a really incredible day already. So I wasn't interested in giving that away. So comes back, stops me out, no big deal. Now, the thing is this had a second leg because it had proven that it was not going to do, it needed to now go above. Let me add half lines. In order to move up and signal a bullish breakout, it would have had to have closed above MR 1.5. Since it could not do that, close above this area, that basically says the end of the bull run is over, and we're just going to go back and tuck in, right? We've explored all these prices up here, and nobody's buying, everybody's selling. We tried to move prices up here. Nobody's up there saying, yeah, this is fair value for an S&P 500 contract. Nobody was saying that. That's why it goes down. And so when it closed below right here, when it closed below MR1, that would suggest that we would reset. Either we're going to go back to the pivot or back to our, kind of a value area. And it had always been established today that this general range was there. So coming back to this general range and just dying out was the easiest thing. The market closed right here anyway. So pretty much the steam, it was just straight down and then just dead towards the end of the day. So that's pretty much our trading strategy throughout the trading day. Just get in, hit the open if it's there. Not every day it's there. We've had 2 days in a row. So I'm guessing probably tomorrow is not going to be a gap day. But now we also notice that this whole range, so this is something you want to pay attention to as well. This whole range is, there's a lot of volume that's been happening here. A lot of trading's happened in this general area. So we're going to hang out here probably. If it breaks, we may come down and test this a little bit. And if it breaks up, we may, you know, we've got other levels that we may go and see. But that's not important because we take it every day. We take what the overnight session sets up the bands for the next, or pivots for the next day. And then we just kind of wait. So in the trading lab, bright and early, about 15, 20 minutes before the market opens, I put out the morning trading plan, what I'm seeing, what I'm expecting. And at least that's going to give us, if we're going to like, first things first, is there an opening gap trade? Nope. Okay, cool. Well, you're going to, if that's the case, well, then you don't have to, when the market starts, the ding, 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 you can, you know, have yourself a nice cup of coffee, go for a walk, kind of do whatever, knowing that the opening gap trade is not something you need to do. It's a high win rate. The way we run it in the lab, which you've gotten a taste of it, but that's not the full strategy. The way we run it in the lab, it's very easy to just say, yo, get out, go take the morning. We'll meet we'll be back on trading in another half hour, an hour. And then after that, after the first 2 hours of trading, we jump on a live stream, usually not every day, and go over what's going on in the markets, what's happening, and you know, go over some Q&A or take a look at a bunch of charts and maybe go over a different strategy or something like that. Not every day. And then throughout the day, posting the trades in the Slack channel, you know, sometimes 2, 3, 4, 5 trades a day. We average anywhere from 2 to 4 R per day. So, you know, whatever your risk per trade is, that's 2 to 4 times that we're taking home on an average trading day. We've got swing trades going at the end of every day. So at, you know, a couple hours after the market closes, I post all the swing trades. So if you're, you know, if you're working or you're doing other things, you don't have time to sit in front of the market all day long, you just get the message notification. It says, we're buying this tomorrow, or we're buying the euro at this price, or corn at this price, or natural gas at this price. Here's our stops. And here's where our profit targets are going to be. You just get that. There's about 3 to 5 of those trades per week. And, you know, over the course of a year, it stacks up. One of the biggest, most important parts of this whole thing is risk management. It's fun to sit here and talk about all these trades and what we're doing, but if you understand the risk management that goes into it, what got us into the point to where we're this profitable so far in the market, it's the cycle right now. It was kind of tough in the, you know, as markets transitioned. So some of the trades that we were doing in January and the February bottom, you know, we were expecting, you know, it hadn't fully transitioned into a bear quiet. And so we weren't able to step on the bear quiet strategies as much. We were still in kind of a neutral area. So we lower our position size dramatically and kind of just, you know, see what's going on, take the tactical trades as they hit, stay away from, you know, taking big bets that, you know, that are just gambles. They don't need to be done. You need to stay, you know, tighten up that risk and just, you know, enjoy the time. And then when it becomes easy, may end tomorrow, but when it becomes obvious and easy, you can increase your risk. You can start taking your position size and back up. And so it's kind of a, you know, an ebb and flow of how the market flows. It's, you know, sometimes it's super easy, sometimes it's super hard. The hard part about it is following narratives, taking a bet on somebody on Twitter who's saying, you know, like, I don't know, the Fed's ruined us or something, or doing what Jim Cramer says, or doing the opposite of Jim Cramer, or, you know, like it's a meme right now that, you know, fade everything Jim Cramer says, but that's not a good trading strategy. That's not a good trading strategy. It's not quantitative. It's not useful. So guys, like, subscribe, share this video with your friends and family. It would be cool if you did. Do check out pollinatetrading.com/lab. Get signed up in there. We're making a lot of money these days. We're really doing good in there. And it would be awesome if you would join us. So with that, I am going to wish you farewell and happy trading, fam. Make sure to, again, like, subscribe, share. Bye.